It's almost June 30th and there's been a lot of changes to the Payroll Protection Program. Are you ready to file your loan forgiveness application? Do you know when to file it? Do you know what it is? Maybe you should watch this video, right? So the Payroll Protection Program has had many changes since it was first rolled out as part of the CARES Act in March. We've had all these individual SBA rules, and then the Payroll Protection Flexibility Act, which changed the 75-25 payroll rule to 60-40 and a few other goodies. So what I'm going to talk about now is just the current state of the PPP, what you need to be thinking about for loan forgiveness, and let me give you a little preview. I'm about to give you some really good news. They've sweetened the deal and made it a lot easier. First, let's quickly cover the changes from the Payroll Protection Flexibility Act. The major one that I quickly referenced earlier is that instead of spending 75% on payroll and 25% on utilities and rent, you are now allowed to spend 60% on payroll and up to 40% on utilities and rent, although you can spend all of it on payroll if you want to. Another really big change in the Flexibility Act that they just rolled out to try to clean up some of the issues from before is that you have the choice of picking an 8-week covered period or a 24-week covered period. Now, if you've already planned everything out for your 8-week period, then just keep the 8-week period. It's easy enough. But there's one circumstance where it becomes really important that you pick a 24-week period. If you are a self-employed business, so you're the only owner of your business and you pay yourself through the business, you got a PPP loan based on 2.5 months of payroll. But then there's this stupid rule, and yes, I'm going to use harsh words like stupid, that the SBA came up with that said that if you're an owner, you can't get more than the same amount of pay that you got in the same period last year. Well, the covered period was only 8 weeks. How in the earth can you get 2.5 months of payments in 8 weeks? The math doesn't work because 2.5 months is longer than 8 weeks. So if you are a self-employed business owner that got a PPP loan, you need to elect the 24-week period. If you do not elect the 24-week period, you're not going to be able to have all of your payroll loan forgiven. That is an alarm. If I had the little alarm emoji, I would put it right here. Everybody can go, alarm. Finally, the last part of the Payroll Protection Flexibility Act that is a big game changer is the new safe harbor provision, which we'll talk about when we get to the application itself. So we talked about the PPP Flexibility Act changes. Now let's talk about the most exciting thing I'm going to tell you. They've simplified the application form. So now it's form 3508EZ. And that form has gone from 8 pages with multiple addenda and exhibits to the addenda to just straight up 3 pages, and one of them is just a bunch of initials. It's very, very favorable. Whoever did this at the SBA, good job. And if you had not done this, then it would have been terrible. So thanks for not making it horrible. There are 3 types of people, 3 categories of businesses that can use this new streamlined form. Number 1 is if you're self-employed, you don't have any other employees. Number 2 is if you are a business owner that has employees, but you have not cut the hours of your employees at all, and you have not cut the pay of any individual employee by more than 25%. The third one is the most exciting one that the most businesses are going to benefit from. So businesses with employees whose business experienced reduced business activity, whatever that means, I guess it's sales, we don't really know what it means, but if you experienced reduced business activity between February 15th and the end of your covered period, so it's going to be that 8-week period for those that are going with the 8-week, it'll be between February 15th and the end of whatever the 24-week period is, if you choose the 24-week period. If during that period of time you have reduced business activity versus February 15th, 2020. So you're comparing a range of time to one day, which is a little weird. But so long as you have less business activity in that range than you did on average on that day, and the reason that you have less business activity is because of an order from the federal government, and it has to do with COVID-19, then you're going to be eligible for full loan forgiveness so long as you spent the funds appropriately. So all this conversation about full-time equivalents and making sure you get back to your full-time equivalent number by the safe harbor period and all this math and all this work we were talking about doing that I've done videos and videos on, doesn't matter anymore. That's all gone now. So if you're a restaurant, for example, in Ohio, so I'll talk about what I know, we were subject to an order from the governor's office that said that restaurants could not have dine-in business for a period of time. And that's enough. That is enough to meet that safe harbor criteria, because if you look at the text of the order itself from the governor, they reference the CDC, which is really what the application requires. So if you want to be sure for your state, I would go and look at the order of your governor. If your governor did not mention the CDC in the order, in theory, you may not be eligible, but you really should be. So go look at that. I know everybody in Ohio is good. Most states are going to be good. But this new safe harbor provision in the EZ application is a game changer. Really, everyone should have full forgiveness so long as you're not, doing something criminal. Finally, let's talk about when do you need to file this application? When do you have to worry about doing this? So the latest, the extreme deadline, for those of you that like to wait till the last minute, is 10 months after the end of your covered period. So just for the sake of an example, if your covered period is on June 30th, you're going to have 10 months. You're not going to have to worry about filing that until, April 30th of 2021. So if you want to wait, you can wait a little bit. That's fine. But if you want to go ahead and get this over with, you can file it as soon as the end of your covered period is up, is when I would recommend it. Although it is possible to file sooner than your covered period. There are reasons to not do that. Just don't do that, okay? File when your covered period is up, or within 10 months of that, all right? So you got a 10-month window, and you're gonna have to do some stuff for the application. So how does the process work exactly? Well, you're gonna fill out this easy form, and you're going to send it to your bank. Some banks may have their own online forms, that's fine. So I would reach out to your bank before you start doing all the work and see exactly what they want you to do. But you're going to fill out the form, and then you're going to go ahead and gather all of your proof that will include things like payroll, things like, if you paid your rent, you're going to need a copy of the lease. That will be helpful just to prove that, that lease was a pre-existing obligation before February 15th, which is a rule. So you're going to gather all those documents. Really, it's going to be similar to the documents you sent the bank before. It's just going to be the documents showing that you, in fact, did, have those payroll expenses during the covered period, and all the covered expenses, and basically that you didn't spend the money on anything you weren't supposed to spend it on. So once you submit that to the bank then has 60 days to review it and send it on to the SBA. The SBA has 90 days to either approve the bank's file, dig into it further, or ask for more information. Given the volume and given the statements that we've heard from the SBA, I really wouldn't worry about that at all, especially with this safe harbor, and especially if you're a business under $2 million, we've been told we're good, okay? So as long as you didn't do anything super criminal, you're gonna be in good shape. What's super criminal? I don't know, spending the money on things that are definitely not business related would be super criminal. Lying about having a business in the first place, we've seen people prosecuted for already. But in general, businesses that got a PPP loan should get all of that money forgiven if you're trying at all. This is probably the last PPP video, but who knows, maybe they'll make a whole new rule, or maybe they'll do another round of PPP and I'll get to do this again. If not, we'll see you on the interwebs in other series. Have a good one.